Welcome to The Explainer. We're diving straight into a masterclass on financial architecture today. I want you to imagine, just for a second, that you're holding a hidden blueprint, a document that lays out exactly how the wealthiest people in America structure their lives. And they aren't doing it by breaking the rules. They're doing it by absolutely mastering them. We're going to decode that blueprint right now. We'll be exploring legally sanctioned strategies drawn directly from our source material that are completely available to the everyday American to build wealth and minimize what they owe. So buckle up, because the way you look at your money is about to change forever.
We've basically all been conditioned to view the US tax code with total dread, right? It feels like a penalty, just this constant drain on our hard-earned paychecks. But what if that perspective is completely backwards? Actually, scratch that, it is backwards. What if, instead of a punishment, it's actually a strategic rulebook? Wealthy Americans don't see the IRS as this big bad enemy to be feared. They see the tax code as a detailed instruction manual for building a fortune. It literally tells you exactly what the government wants you to do, and exactly how they're going to reward you for doing it.
Section 1. Avoidance versus evasion. The legal line. Now, before we uncover these strategies, we absolutely must establish the strict legal boundaries of this blueprint. There's a massive distinction between playing the game intelligently and, well, breaking the law. Tax evasion is illegal. That's hiding income, cooking the books, outright fraud. It's a financial crime that will land you in prison. But tax avoidance, that is 100% legal. It's strategically using the exact incentives the government has explicitly written into the law. Evasion is criminal, but avoidance is financial genius. In fact, it's exactly what the IRS expects you to do.
You've got to think about it this way. The government uses taxes to incentivize behavior. They want citizens to create jobs, so they offer huge tax breaks for starting businesses. They want citizens to provide housing, so they offer massive deductions for real estate investors. By aligning your money with what the government wants to achieve, you get rewarded with lower taxes. But how exactly do you play by these rules? Well, the answer lies in a secret the wealthy know about: how money is actually classified. Section 2. Two types of income. The wealth divide. The math here shatters a really common illusion. Most of us grew up believing a dollar earned is a dollar taxed, no matter where it comes from. But the blueprint reveals a pretty stark divide. Ordinary income, that's your salary, your hourly wage, your standard paycheck, is taxed at the absolute highest rates the government levies. On the flip side, you have long-term capital gains. That's the profit from investments like stocks or business you've held for over a year, and it is taxed at a significantly lower rate. The wealthy don't just focus on earning more ordinary income, they focus intensely on converting their effort into investments that generate capital gains. And here is where it gets truly jaw-dropping. Under certain conditions, depending on your total income bracket, holding investments long-term can legally drop your capital gains tax rate down to 0%. Zero! You could legally sell an asset for a massive profit and owe the federal government absolutely nothing on that gain simply by holding it long enough and falling within the right thresholds. No way, right? But wait, how do you shield your ordinary income while building this capital in the first place? Enter the vaults. Section 3. Your tax-free vaults, 401ks, and Roth IRAs.
Okay, we're shifting the narrative now from how you earn your money to where you store it. A tax-advantaged account is a highly specialized tool. Accounts like 401ks and Roth IRAs aren't just boring, run-of-the-mill savings buckets. They are impenetrable, legally protected wealth vaults that are available to almost every working American. They offer environments where your money can grow either completely tax-exempt or tax-deferred, which means you're just pushing the tax bill decades into the future.
Let's trace the cinematic, decades-long journey of a single dollar in one of these vaults, like a traditional 401k. In year one, you contribute pre-tax, so you are legally lowering your taxable ordinary income right now, today. Then for the next 30 years, that dollar and all the investment returns it generates compound totally shielded from annual taxes. It grows so much faster because there is zero tax drag holding it back. Finally, in year 30 and beyond, you make strategic withdrawals, often when you're in a much lower tax bracket during retirement. It's a total masterstroke of timing. But paper assets are just one part of the equation. There's a physical asset out there that offers an even more powerful hidden shield. Section 4. Real estate's hidden shield. Welcome to the next layer of our blueprint, real estate. And we aren't just talking about buying a house to live in. We're talking about the concept of depreciation. I know, it sounds negative, kind of like a car losing its value as soon as you drive it off the lot. But in real estate, it's an absolute wealth generator. The IRS lets you deduct a portion of the cost of a building every single year as a wear and tear expense. But here's the secret. You get to take this deduction against your taxable income, even as the physical property is likely going up in market value. It's essentially a phantom expense. You aren't actually losing money out of pocket, but on paper, your income looks dramatically lower to the IRS. So, depreciation creates those beautiful paper losses. Then you add to that the ability to deduct the interest on your mortgage, and suddenly you have a heavily subsidized asset. And it gets crazier. The 1031 exchange rule takes it even further. This rule allows you to sell an investment property at a profit and roll every single penny of that money into a new, larger property while legally deferring 100% of the capital gains taxes. You can do this over and over, continually leveling up your wealth without ever taking a tax hit. So, real estate and stocks are the individual pillars. But what happens when we assemble the complete architecture?
Section 5. The Ultimate Wealth Blueprint.
This is where the magic truly happens. We're bringing these distinct strategies into one cohesive, unstoppable force. The complete architecture comes down to 3 major steps. Step 1. Start a business. Honestly, even a side hustle unlocks an entire world of deductions. A portion of your internet, your phone bill, your travel, they can become legitimate business expenses, legally lowering your taxable footprint. Step 2. Invest tax efficiently, using those vaults and capital gains rules we just discussed. Step 3. Utilize charitable giving. Philanthropy isn't just good for the soul, it's heavily incentivized. By donating appreciated assets, you can avoid capital gains taxes entirely and still get a deduction for the full market value. You do good for others, and you do incredibly well for yourself.
When you build this into reality, a stark mathematical contrast emerges. Look at an unoptimized strategy. You earn ordinary income, save whatever is left over after high taxes, and invest in taxable accounts. The result? High taxes and low wealth retention. Conversely, an optimized strategy runs income through a business for deductions, maxes out those tax-advantaged vaults, invests for capital gains, and utilizes real estate depreciation. The exact same gross income yields a massive, life-changing difference in retained, generational wealth. This completely proves that tax optimization is not just for the ultra-rich. It's for absolutely anyone willing to learn the rules.
Listen, if you're in your 20s, 30s, 40s, or 50s, consider this your wake-up call. Stop viewing the IRS as some unbeatable enemy that just exists to take your money. The tax code is a map. It's a giant set of incentives just waiting for you to use them. These strategies are public, they are completely legal, and they are accessible to you right now. Learn how money really works. It is your blueprint to build.
So, I'm going to leave you with this final thought. You now know the crucial difference between evasion and avoidance. You understand the insane power of capital gains, tax-free vaults, and real estate depreciation. The blueprint is sitting right in front of you. The only question left is, will you let the tax code drain your wealth, or will you use it to build your empire?